Hello everyone, this video I'm going to go over the real basics of my price movement trading strategy, okay, and this is the simplest way to trade the strategy, and that doesn't mean that it's necessarily better or worse than any other way of trading these ideas, but if you're just starting out, it's a good way to get a feel for the system and see how it feels for you when you're trading it. So what you're basically doing is you're looking to enter sells and buys when price changes direction. And the way we do that is we look for a change in the color of the bar. So you can see here, this was a bullish bar that closed, a green bar, and then we've had a change in direction. Okay, we've closed as a bearish bar, and then what we're looking for is a breakout on the next bar. Okay, and we leave a little bit of space to our entry there, not right on the low. Okay, and when this breaks out, we're going to place a stop just over the top with a bit of space there as well. And essentially what we're doing is we're looking to hold this short trade until we get a change in direction. Okay, and you can see here we changed to a bullish bar, and we would have been looking for a breakout long, but it doesn't come, okay, on the next bar, and we close bearish again, so we continue short. Okay, the next change in direction is here, and we would have taken a breakout long, and we put our stop under the low. Okay, if your trigger bar isn't making the swing low, then you can place your stop at the swing low. Okay, because we're trying to secure the swing points, okay, because they have the most potential. That's where we want to enter our trades, at the extremes of price. Okay, so at this point you're obviously hedged. You have one long and one short, and you have this locked in profit. Okay, the next trade would be a short here. We change direction and break out with our stop over the high, and then a long here, and then a short here with our stop over the high. Okay, then we change direction again, and a long here with the stop under the low. Okay, and then price continues up. So you see, that's how we take our entries. There's no analysis on the entries at all. We're going with the flow of price. Okay, and we're using the close of the candle followed by a breakout to enter into those trades. So you don't have to use any analysis at this point, or really any decision making. Now, when it comes to managing those trades and exiting them, this is where we have to make the decisions, and this is the part that decides how profitable you are, or if you're profitable or not. Obviously, how price moves as well, the movement of price, is going to have a significant impact as well. Okay, we have no control over that. We're not going to use analysis to decide that. We just know through experience that price does have to move, and when it does move and you're trading this way, you're going to be in the trades. Over time, those movements will average out your winners to be larger than your losers, and your win rate tends to be around the 50% mark. So all you really need to do is average your average winner to be slightly larger than your average loser, and that's how you get your consistent gains. So that's kind of the logic, and that's how you enter the market. And now the trickier part to learn is the when to manage your trades and when to exit. Now, obviously, the first point is, if you're short here, then you might as well hold this trade until you at least get a direction change. So here you can see we've had a direction change. Now we can think about managing that trade. Okay, and we have a few options. You can move your stop to break even and look for the breakout here, okay, which doesn't come. You can take profit here and then look for the breakout here and continue trading. And the third option is you can leave the stop where it is and just look for the trade to enter or not. and as you see, it doesn't, and it continues down. So you have that decision to make every time there's a change in direction. So let's say we held this trade and then we came down and we closed up. We basically have the same decisions again. Move to break even, take profit here, or we can look for a breakout and hold our short. Something else you can do is move your stop loss down as a take profit, like a stop and reverse. So if this does trigger long, you take profit on the short, and now you're into a long trade. And essentially you just have those same simple decisions to make every time, okay? And then obviously you need to decide whether you're going to take shorter profit and enter more often, or you're going to hold your trades for bigger wins. Now, one other element that you need to consider is, let's say we took this short here and we held this trade down and we were still holding here when we triggered long, okay? Now we're in a hedged position, which essentially makes us flat in the market with one long, one short, and a locked in profit. Now, once you're hedged in like this, you can continue to trade. So then we could have taken this short here and this long here. Now you can apply a different management style to these inner trades, to these longer trades. So what you're doing is basically the current high and low, you're holding those for a bigger win, and these you can manage with a more short-term view. So for instance, when we closed up here and this short stopped out, we can also close out this long, recouping some of our losses, still holding our extreme, and then we would have gone short here and then price reversed and continued long and stopped it out. Now at this point this short has stopped out as well, and we just have this long to manage, okay? And again, at the change in direction, we can take profit, we can set a TP here, or we can move it to break even, okay? That in essence is the system, okay? In its entirety, you're basically flowing with price and then managing those positions. And to get good at it, it takes a bit of time, it takes practice, and it also takes the ability to try different things out, different types of exits. Everyone kind of manages their trades differently, and really you should find whatever's most comfortable for you. So that's just a little recap of the basics. It's a really solid system in its basic form like that, and you don't really need to add anything to it. But there's always many options in trading, and you should sort of explore them and see what feels most comfortable for you. For me, what is most important here is you're not getting bogged down with analysis. So the important decisions when to manage your winning trades and when to take profit, you're alert and you're not exhausted from a lot of over analysis trying to decide whether your entry is a high probability entry or not. So go away with that. If you're new to this, pull up some daily charts is a great one to test it on, and run through some scenarios and different management ideas and see how you would have done. The whole idea of this, remember, is not to get big wins out of the market. The whole idea is to be consistent. So if I'm trading daily, I'm looking to have consistent winning months. Okay, I know there's going to be months where I have losses and drawdown, but I know the majority of the months I'll be net positive. Okay, and over a long time you can build up your position size, and that's how you can make your money. Few other little tips. I use the same position size for every trade. Okay, regardless of the size of the stop, I don't adjust my position size. Again, that's slightly contrary to what you might have been taught in the past. Test it, see how it works. There's good logical reasons for that, and I'll cover those in some later videos. So that's it. Please leave your comments below. enjoy the weekend, and I will do some more videos on Monday.